Hey everyone, welcome back to the channel. This is Richard and Ray, and today we're continuing on with our winning characteristics video with UPSt. And in this video, we'll be talking about both the technicals and fundamentals, and also the basically routines and processes that you can set up and establish so you can catch a potential winner like this when it presents an opportunity and a promising setup. So with that, Ray, I'll turn it over to you, and let's go ahead and start from the beginning with the stock, which had a tremendous run, really starting from its IPO.
Right. So in this video, we'll cover a few things from a process perspective and also how to potentially position in this. So from a technical point of view, what I basically see on the first three bars is if you have a weekend routine in place, this sort of run, if you're already not on top of it, pre-IPO or pre-listing should catch your eye. So there are one of three ways to catch this right off the bat. One is you could have an IPO scan that you run on a daily or every few days. The other one is just having a pure volume screen to go through at the close of every day, and something where the volume is, let's say, greater than 7 million on the day would get this sort of stock onto your IPO watch list really in the first 3 days of its run. Most traders, if they haven't picked up this particular stock from its pre-IPO days and sort of track the pricing, they know the story, the whole AI type of theme that they have going with this sort of stock, then this day it would show up on the volume scan, this day it would show up on the volume scan, and this day it would show up on the volume scan. The other thing on this particular stock, so if you do catch it on the weekend and you update your watch list on the weekend, that would make it on the IPO watch list. So that's, just to cover how do you get this on your radar, right? Because that's always the first step to positioning in any name, is you need to have it on your watch list or your radar somehow. The other resource that we've mentioned in previous videos is the IPO Roadshow. If Richard can link the.
Yep, I will.
In the description. And then the other one recently that I found is IPO Boutique. Both sites are really good at providing you information on IPOs, and you can sort of keep those two sites as part of your process to keep on top of such stocks that are being listed on the markets. This one, I mean, it's so the character of this stock and what it builds on the first 3 days of its listing is that it really runs when it runs. Right. And we start seeing this, right? So the character of the stock is really developed from its, if you're at this point, you look left. If you're at that point or this point, you're looking left. Like, what does it do? What's the historical, 3 days here, right? It's going right back up. 3 days right there. I'm not making this up. So 3 days, that's the character of the stock, 3 days, right? So always look left, and we want to learn the character of the stock. So it's done this for 3 days. And then really the first entry area that I see is the fact that it came in to a volume area on decreasing volume. Again, we do a simple price volume analysis. Price increases on big volume, price decreases on below average volume, and then volume comes back in to pick price back up, right? So that's really one of the first entry areas is when it comes into volume support, sort of holds that 35 level, reversal off of that level and closes with a high closing range. And then volume starts to pick up as it makes progress. The other thing that I see on this particular name is the fact that it went above 50 and then came back into 50. So this concept or the way I keep track of names is through whole numbers. When you're managing a large sum, it makes it really easy. And many traders, if you're not managing a large sum, is still fairly a useful concept to track stocks so that you're not keeping track of like 69, 48, type of levels where you just say, is it above 70? Is it below 70? And you sort of take it from there.
Yeah, and one thing that I also noticed from the get-go is it does show some type of respect for the shortest term moving average, the 10-day, and we also kind of see this looking to the right on the screen. It repeats it, especially after it has a powerful move, comes back in, shows some support for that level, happens here as well, and we'll see if it happens this time as it kind of consolidates above 200 here on the recent breakout. But it's not a perfect respect, but does show a little bit of it does show a little bit of support at that level.
Right. So let's say, I mean, you really have to be on top of these sort of names to see, you know, on down days, is it outperforming? Again, we get that little RS box in this area. It's going to show up on your RS list and see if you could potentially position through several entry areas. The fact that it came into volume, held, and then came into this 50 level and it held, and then now it really gets trending. If you get an entry around that 50 area, it really never came back to test you in a real way, and then you get a trend out of it, which is really a gift. Now, the other thing that I see is in this area, the RS line goes flat. So the stock is starting to go flat as the market goes down, right? Any stock that wants to be a leader in the markets at any given time is going to exhibit RS. And RS is not the same as RSI. RS is when you're comparing the performance of the stock relative to the S&P 500 or with the NASDAQ, and how is that performance relative to the markets. So every time you see a stock that is in an uptrend above its key moving averages, performing well while the market is going down, that's always a big positive and a stock that you want to, you know, keep track of, see if the risk reward makes sense. And then at some point you will get a good entry out of it. So if you didn't pick it up at this point, now in this area where it's exhibiting RS, it will really catch your eye, right? That's a bid on this name. So as soon as you see that, it should sort of rank higher on your list. And then if it ranks higher on your list, your focus list, you're going to pay more attention to it. And then the possibility of you entering that name gets better and better, right? I really like this particular spot, this really tight formation for 3 days, where it goes from 80, undercuts, and then it comes right back up through that 80 mark, and it really gives you a good return if you bought it as it's going up right back through that 79, 78 area. So a stock that had a bid in this spot is coming up and out and really going for it is really not a surprise because the market pressure was lifted. Dependent now, let's discuss a few exit rules. Say you were long from this spot, right? Or long through this particular spot, then at this point, you're protecting your cost from this entry area. If you got the stock at 50 or into volume support, your exit, the exits that I have is basically two closes below 21 or 23 day, depending on the cushion, right? So from a 50 to 100, that's your double, right? At that point, you really want to see how the stock acts on its first day of the 21 day. This one, it really shows no respect. It just closes at it. And then the next day, it really makes sure that if you're still trying to hold on for some reason after stock has given up 40 points, at that point, I mean, it makes you feel bad for a day, but then eventually it caves in. The other thing is having some sort of situational awareness that on this day, which is Feb 22, and on this day, which is Feb 23, growth in general wasn't doing well. So if everything around you, if the house is on fire and you're sitting there still trying to act like a deer in the headlights, that's usually not a good idea, because if you just continue holding just because you have 100% gain, you pretty much round trip at that point. So given your goal in the markets, really, you have to pay attention to, you know, our goal is just take this equity curve and make sure that this low is higher than this low and it's higher than this low, right? So we just want to see a rising equity curve. So depending, again, on your goal in the markets, it's some folks can somehow digest this sort of drawdown. Me personally, so 2 closes and I get out. I don't question why, when, where. If it wants to go above that 105, it will eventually set up some sort of entry, and then I could define my risk and see if I could get more alpha out of it. So that's pretty much this particular run from this area to about how do you get out at this. Now, at this point, depending on the type of trader that you are, usually stocks that are below KMAs, depends where you are in your phase in your journey, should not interest you. And then folks really pick it back up right around this area. So this particular characteristic that we've discussed in many videos is your highest volume since IPO. So highest volume since IPO, right? So your IPO day, it's higher than your IPO day. It has a daily closing range, right? Which is really good. Clearly greater than 70%. It's also the highest volume ever, right? The stock's never in its history seen such volume. So clearly all these 3 things scream institutional interest, right? So this is clearly visible on the charts. They're not hiding it at this point. So a few things, again, on how do you, so that's your process to have it, even if you didn't have it on your radar in this area, or when it basically doubled and it's still not on your radar, right? If it doubled here, should be on your HDF watch list at a very minimum, right? But let's talk about this now. We get those characteristics. It should be on your radar. One of the first things that I'm trying to get better at is to go and watch earnings. When it reports earnings, it's likely that this stock did have this sort of movement in after hours, right? So that's something that I'm currently trying to get better at, is to anticipate this sort of movement coming into the day, so that I'm far more prepped and I'm not just watching this day. So that's where I am with respect to, my journey. Is I'm not satisfied seeing this particular bar and just sitting on the sidelines and watching and seeing if it consolidates so I get an entry. I'm trying to anticipate these, if they have the EPS, if they have the sales, if they have something, the volume after hours, right? This is something just I'm trying to study and really get better at the moment. So one thing that I do see is, even if you draw a line through this traditional top of the all-time highs, you still get a pretty good gain out of this stock from that level, right? So so one is you can anticipate. The second thing is that you could set an alert at the very least, right? Again, all of these things, keeping a watch list, setting an alert, is just giving you chances to get this name more and more on your radar, so that you could really potentially catch something like this eventually. So setting an alert at the close of this day and the high of this day, it will bug you twice the same day, or bug you many times depending on the movement on this particular day. So that's another potential entry, right, technique, including the 105.58 in this area. And then we also see that this volume is highest volume since IPO week. So that tells you that this is basically follow-on, follow-through volume coming into the day after the fact that we see this volume signature show up on the chart, right? So overall, depending on your risk appetite, the way you trade, the ranges on this name, just in general, are very wide and loose. So to tackle that, one, you could lower your position size, right? To lower your emotions a little bit. on this name because it really moves. It doesn't move 3 to 7%. It moves 7 to 14%, right? That's just the nature of the stock. The beta is very high. And then when we take a look at MarketSmith, we'll take a look at the reason the beta on this name is really high is really because of the float, right? So in this area, I mean, a lot of this, I mean, if you didn't catch it, the volatility here is manageable. The volatility here is manageable. It trends for you and then it kicks you out. But then this is depending on, again, where you are in your journey and how much you've studied it, your conviction, can you be at the desk all day? Because this is really volatile. If you get this wrong, right?
It's like a 30% range right there, that bar, I believe.
Yeah. So if you get this wrong, you're going to be wrong in a very big way. So you have to be sort of careful with these. As much, as sexy as these stocks are on financial Twitter, you just have to, your money is your money. Doesn't matter what anybody's saying. So it depends on your, risk. If your risk appetite, just go for it and see what happens, then most likely it won't end well. So those are the two entry areas that I see in this. Again, and this action is very hard to manage your risk, right? That's always when you're pressing the buy button, where's my risk at? Where's my risk at? And then the second thing is, what's your edge in this area? So this area, after its initial run, there is really no edge in the action because the action is very wide and loose. So unless you got this 3-day run out of it, you got this, and then it came back, you get a good run, right? Your entry areas have to be really, really proper on this name for you to really manage this really well. And you have to be on top. I feel for this name is to know the story so you could have conviction.
Yeah.
Which is very important because when ranges you go from 72 to 58, you really need to, you need something else other than technicals to really be holding on to this sort of movement. So that's pretty much what I see in this, this area, and maybe Richard, you could cover some of this.
Sure. So after that 3-day move after EPS, like Ray said, there's not much to trade off of until really the next earnings report, which happens on this day right here. And we'll get to that in just a second. But yeah, it just chops around, forms a pretty ugly looking double bottom base here where you've got a pivot right across. Let me redraw that at that 123.09, it looks like pivot. And it makes sure that no retail traders are in it when that earnings basically happens, because it undercuts this low and falls back basically right to the low of the super powerful earnings gap up day. On this earnings report, it's not a good reaction at first. You can see it basically sells off and finishes right at the low. And then we have a follow through day on high volume to the downside. But I think what's really key here is that the next day completely breaks the expectations of the earnings day and that fall through to the downside. And what I mean by that is if you have 2 days in a row on high volume, the expectation is that there's some distribution by institutions. But obviously they stepped in on this day, and the next day we have a gap up within the space from the high to the close. And then we have a very strong day, kicker candle, and closing basically at the high of that day. And that is the expectation breaker. It just basically stops the downside momentum completely. And from there, we continue with the same pattern that UPSt has shown over and over again, where we have a nice trend, powerful trend above the 10-day moving average. And we do have a little bit of an undercut of the 10-day here, but basically this holds it until once again, we find resistance right near these highs and start to leak back down and form another base. And one thing I also want to point out here is this downside reversal bar should have been a clue here that we were going to need more of a basing period, because we had some demand come in and then we got shook back down, some demand come in again, shaken back down. And on this day, I think we were up 10% at one point, and it comes all the way back and closes red on the day. that just shows you that it's not ready. It's going to need some longer term consolidation. And then from that point, we do the same thing that we did within the space. So once again, look to the left on the chart, and we just bleed back down towards the 65 EMA. And like during the space, we find a little bit of support at that moving average, and basically go quiet and tight, chopping back and forth until we're ready to move up once again, and the RS line starts another little bit of an uptrend here. So Ray, anything to add with that area on the chart?
No, again, I feel this particular name doesn't give you time
Right.
to enter. So names usually, if they rally, you get consolidation or you get a shakeout, right? And then they really dry up. You get this sort of movement with this sort of movement, and then they set up a sweet spot for you to really get in, right? This name, if you don't get in, you just go. It just goes, right?
Yeah.
So you really need, I feel you really need the story side of it to really have that conviction, because the technical side of it, I'm in year 12 now. I would not touch, or I have not touched this, or again, it really depends on where you are in your journey, right? You could level up your trading by trading this one, because it's really as volatile as it gets in the markets. But yeah, in this, I feel, I mean, this area, even though, I mean, you get expectation breaker and all that stuff, you still need something to tell you that, this bar is okay on this
Yeah.
particular name, right?
Right.
So if we remove the ticker and we just say that particular candle goes from 115 to about what, 70, $85, would you touch that stock if it wasn't this one? Because this one just has a history of doing crazy things, right? So this is still within the nature of it, where reverses trend and it goes and gives you a return for your conviction. So the next thing that I do want to, I mean, if you look at this area, there's a lot of chop. There's not a clean break,
Right.
right? There's a lot of whipsaw, and we're going 30 points a day. So this is a fairly aggressive diet that the stock is on. So again, if we use the traditional pivot, it doesn't really line up, right? If unless you get an entry right, through this expectation breaker, then it makes you look good. But from a technical point of view, just price volume, calm action, you're in it so that you could trade the next 10 years and not the next 2 days, then it's a different story. So the next part of it that I want to cover is this area. So any stock that is exhibiting this sort of action, and it's in the eyes of the institutions, it's going to get tight.
Yeah.
If it's a really good story, future estimates, earnings, and the institutions want to accumulate the stock, it's going to go dormant and it's going to really tighten up. And this is really what it did in this phase after it did an offering, right? And the excuse might be that it's absorbing the offering, but I've seen stocks that don't absorb the offering quite often in the markets. So this one is just, when institutions want to accumulate stock and they see potential in a story, it's going to get tight. We saw that with the GRWG walkthrough, right?
Mm-hmm.
Doubles, then it went dormant for about 3 months, right around that 15 area, and then it took off, right? It gave you an entry. So this particular stock is the same. I mean, we're coming from 25 to 100, right? So you just quadrupled. And then now it's in the eyes of the institutions. It has to get tight. So any stock that's being accumulated, rational accumulation, will get tight and the ranges will really narrow up. I feel, I mean, unless, again, this is not your typical action in any other stock, but you need some sort of conviction to be continuing to, sort of trade this in anticipation of this action. So
Right.
I don't really see an entry area here. There's a lot of wicks, right? 140 back down, 35 back down, 30 back down. So you need some sort of other conviction. The only positive that I saw was on this drawdown in this area is the volume. There were lack of sellers now at this point. This was really the first time when the P, which is the price, and the volume started making sense a little bit, right? Price is decreasing, but now it's run out of sellers. So when price, and we see a dry up in volume with price decreasing and it's run out of sellers, the natural reaction is the price is going to go up to find demand, right? So markets, price is looking for liquidity, price is looking for volume, and it's going to be attracted to those levels, right? So it's searching for liquidity. Now it's like there's basically nobody wants to sell. So now it's searching for liquidity. If you think of it that way, that's just a supply demand. The way to think about it from a supply demand point of view. Let's wrap it up with this talk. So this particular, I've been pretty vocal that I didn't position in this name, and I feel like that I should have. And my execution on this particular week of August 10th wasn't the best in the markets, whatever the reason might be. So we know that from the prior, from IPO day, right, to the first 3 days, it was up, and up, right? And then we had the earnings gap right around that 80 mark, and then we had 3 days up on that. So this is within the character of the stock. So me personally, I'm fairly disappointed that I wasn't anticipating, or whatever the case might be, I wasn't on top of it. So this is perfect. This action, just looking at the character of the stock, should be anticipated, even if you take a 2 to 3% loss on it. Because at that point, you're getting a 20, 25, 30% return for such little risk, right? So me personally, I'm going to be printing this out and just making sure that I drive this point home where I know the character of the stock, but something is just stopping me from executing. So the way you get better is you write it on paper and have it on your desk, and maybe the next time that it happens in the markets, you can hopefully react and not build a bias against a particular name. So the other thing that I see is there's a lot of volume on this name, but now the price action is 8%.
Right.
On such big volume. So what that tells me is that price on a per level basis is moving, there are more shares traded on a per price level. So that means that the liquidity of the stock is increasing. And you'll likely notice that if you're really, a market nerd, look at level 2, and you'll see the bid and the ask started, compared to this area. And if you compare that to this area, they're going to be very narrow and very different. So that's a big positive, right? So there's more shares being traded on a per price level, right? And the stock is moving less and less. So that's a potential good sign. Now, the last thing that I want to cover, we're reaching the 30-minute mark, is basically that one. So what happens now? What am I looking at now? I'm basically looking for some sort of consolidation up here versus this 190, 189, or I'll just say 190 area, right? Because I don't like to keep track of decimals, but if price comes back, maybe does an undercut, right, and then holds that 190 mark, maybe that's an area I get interested in, and then see what happens from there. The volume is there. I feel so on the weekly, this is the best dollar volume breakout in the last 6.5 months, if I'm not mistaken, or might be less. I think 4.5 months. This is the best weekly dollar volume breakout. So you want to keep an eye on this. Any consolidation here, anybody that didn't get into in this area, you bet on the initial reaction, they're going to scoop it up and see if it can make new highs. So that's what I'm watching on it from a technical perspective. We
And
could go over to Market Smith.
yeah,
If
let's
you,
do that because from the numbers and from the story and just from the fund sponsorship, you can see that this stock is being accumulated. Looking at this trend, it's gone from 53 funds to now 208. You've also got one IBD flagship fund. That's always a plus. And if you look at the quarterly numbers, the annual estimates, that's basically why this stock, this company is supposed to earn more and more every single quarter, every single year, and it's in a promising industry as well. You can see over here, it's ranked number 4 out of 197, the finance consumer loans group, and overall fintech as well has been doing well. We also saw a really strong earnings gap up with LC, which Ray, you've been playing that one. So in terms of that, it's got the fundamental numbers. It's got the annual estimates of 750%. I would like to see the 2022 estimates increase over the course of the next weeks or months because we are getting close to the end of 2021. It's starting to become more relevant that really the 2022 estimates, but we'll see what happens here as well, and also see if this number right here, the 206 number, if that starts to tick upwards in the coming quarters.
right. So let's flip over to LC quick. That's just a, I guess it's being boosted by the theme in this particular group. Very similar. If you guys go back and study, maybe if you watch this video, go post a chart, tag Richard and I or something.
Yeah.
This particular stock is very similar. Reported earnings. This is the highest volume in 1 year on this particular stock. So it had that characteristic. It was above this pivot area, and then I sort of positioned through this 25 mark when it tried to, follow through. Given again, it has a character of going for a few days. So if we really take a look at it, the gap up, and then it's really trying to push, right? Then what first day, second day, and the third day to really get out of that area. And then it's sort of been acting well, up about 15%. Again, that's no UPSt, which would have given you a 30 to 32% gain from that gap up day. This one's fairly different in the way it trades. So that's pretty much all I had
Yeah.
on this stock.
Yeah. Do you want to do a quick review of what we've talked about? Maybe flip back over to stock charts.
Right. So to review the characteristics and the process of this was basically how does it get on your radar, which is the IPO watch list. The second thing is running a volume scan every day, which is something I've been doing recently, something greater than 7 million or 6 million, whatever the case might be. That would get it on your radar in these 3 days. And then we discussed the fact that your entries on this name have to be really proper because there's really no consolidation. It's gone from it moved up from its IPO and it's trending up and out. We discussed the 2 closes below the 21 day keep you, the gains that you get from the 50 or the 36 area. You still get a double even if you sell at the very low of this day. The other thing that we discussed is the highest volume ever and the highest volume since IPO, right? If it wasn't on your radar in this area, it would get on your radar in this particular characteristic. I quickly discussed the ways I'm trying to anticipate this sort of movement coming into the session rather than just being on the sidelines and watching it. This sort of move, this area is basically a wide and loose action unless, it's really wide and loose and it's hard to define risk, right? The first 2 questions we ask when we click buy is what's the risk? And 2 is what is my edge? So either
Right.
or, I mean, in this area, it's really tough to define that. And then Richard quickly covered the potential entries in this particular area. And then we wrapped it up with stocks that are in the eyes of institutions will always get tight so that they can be accumulated in a proper formation. Really, the first time we see a PV relationship on this name is when price decreases and the volume tapers off. And then these 3 days are very sorry about that. These 3 days are very similar to these 3 days and these 3 days. So the stock's built a character, always look to the left, always look to the left to learn about what the stock may be doing. Last thing, so this volume, if we just say this is about 45 million shares at about 160 to 200 area, this is your best dollar volume breakout in the market at the moment. So you want to keep an eye, see how it consolidates versus this 190 area, and then whoever didn't pick it up, I feel surely you're going to pick it up and scoop it right back up. So those are the things that we discussed.
Yep. And all I'll add is on the fundamental side of things, we see the big quarterly numbers. We see the estimates increasing. We saw the increasing fund sponsorship. And of course, the story is what's driving those institutions to the stock. They're basically developing a machine learning algorithm to better pair borrowers and lenders. So everything works out well. And basically, this is kind of replacing the FICO score, which at the end of the day helps institutions, helps the banks better know how to provide capital. So with that, I think we'll end it there. Thanks so much for watching. If you enjoyed, go ahead and leave a like down below and subscribe if you're new to the channel. And also go ahead and check out the other videos in this series. Really, I think this is the best technical analysis series on YouTube. AMD last week, both Ray and I talked about our recent trades of that stock. Really highly recommend you watch that. That'll be linked down below and popping up right now. And with that, I think we'll leave it there. Thanks again for watching, and we'll see you guys in future videos. Thanks.